Hey everybody, Chuck Barone. It is Thursday, October the 5th, 2023. The crazies are running on Wall Street, man. What a wild day, guys. It was, everybody was, in the beginning of the day, the fear. Then there was, oh, wait a minute, maybe this jobs report isn't going to be so great. Maybe it's going to be a little softer. The market rallies. The market just has no clue what in the hell, which way it's going. It's just a drag. But before I get rolling on this day, let me take a half a second and welcome everybody to the show. Let you guys know how much we appreciate your guys' support every day. I got money yesterday from 4 or 5 people sending me money. I can't tell you how great that makes me feel, even though, the donations are not big, $5, $10. But it's really nice to know you guys really want to help support the work we're doing here, and I appreciate that. And appreciate all you guys do, from hitting the like button to asking your questions, your comments, all the fun stuff you guys do. Can't tell you how much we appreciate it here. The interaction makes this all worth it for me. All right, so let's talk about these crazy-ass markets today. So, like I said, the markets today went through the gamut of their 2 emotions, fear and greed. And at first there was fear, then there was greed, then there was fear again. So the market's basically ending the day pretty much flat. Now the big thing everybody's waiting on is this data tomorrow on jobs. How many jobs were created last month? If the jobs report beats it, if the report is higher than what they're estimating, it could be a crazy day. If the jobs report is off by a ways and the way too high and the jobs aren't being created, market could have a big rally tomorrow. So it's going to be a fascinating day tomorrow. And it's interesting because coming on a Friday, I'm sure the traders are loving that. Typically, they want to be out of there the second the bell rings on Friday. So it's going to be a fascinating day tomorrow, as was today. The bond market today, so stocks basically ended the day flat. Nothing really happening in the stock market. The Dow ending up just down 9 points, sitting at 33,119. The NASDAQ down 16 points, 13,219. The S&P down just 5 points, 4,258 in the S&P. So all the indexes down, but very, very minimally. And I think, like I said, the market's holding its breath, waiting on the data coming later today and the data we're going to get tomorrow. Bond market had a little bit of a rally today. The bond market's been selling off like crazy. They're calling it a rout or a catastrophe. There's a lot of cool adjectives. But the market actually finding some buyers today. Rates coming down just very minimally. The 10-year, they say down 2 basis points, 4.72% on the 10-year. And the 2-year falls 3 basis points, sitting at 5.02. So now that inversion narrowing even more. Now we're down to 30 basis point inversion between the 2 and the 10. Looks like they're going to flatten out, man. That's going to be fascinating to try to see what that means going forward. But the bond market getting a little bit of support today. Good to see. These are pretty juicy rates. If you're a bond buyer and you've been sitting on bonds, buying bonds in the zeros and the 2s, these numbers are pretty heartwarming for you. I'm surprised there's not a little more interest in this than there is actually. But everybody afraid to buy bonds because rates could go higher and those bonds are going to lose value. So the bond market got it in a tough spot right now. The dollar today down. Wow, dollar comes down pretty good. Actually down almost a half a point, sitting at 106.35 on the index. Showing a little bit of weakness today, surprisingly. No real challenge to the dollar that I've seen anywhere, but the dollar number's coming down. Interesting, sadly though, in spite of a weaker dollar today, gold and silver having trouble getting up off the mat. Down small today with gold down $1.20, sitting at $1,819.80 for an ounce of gold. Silver falls just 5 cents, $20.93 for an ounce of silver. That was disappointing to see that today. I thought with the dollar coming down, we might see a bounce. Maybe it's going to take a little bit to digest it. Maybe we get that bounce tomorrow, depending on what the data and the dollar look like. But that was a disappointing day for gold and silver today. Oil, everything down today, basically, except bonds, go figure. Oil today also coming down even further, down another $1.78, sitting at $82.44 for a barrel of West Texas Intermediate. They were pretty convinced we were going to immediately have $100 a barrel oil. Ever since they made that, pretty much got the whole world to believe it. Oil's been doing nothing but going backwards. Now there's big fears of recession. This whole soft landing idea is getting exposed for the crock that it is. And I think that demand fears driving oil prices down. Bitcoin also down today, moving with the market, down $251, 27,435 on Bitcoin. Still a strong number, still holding its own. All right, so let's talk some stuff today I want to get off with you guys. The jobless claims, this was the data today that gave them a little bit of, pretty exciting stuff. The market thought this number might come in soft. It didn't. Job claims coming in at 207,000. The forecast was for 210,000. Both of those are still very low numbers. The market needs the 285,000 is like the neutral number. Okay, so jobs not really being gained, not really being lost. 207, strong labor market, jobs still strong. Fed going to have a conniption about that. They really believe that this hot jobs market is what's driving this inflation. Hot jobs equals wage gains, equals more money in the economy to be spent, equals higher prices. So we'll see now how things work, how the Fed reacts to this. I think tomorrow, this report, everybody wanted to shrug this off, and now they're all waiting on tomorrow's. Tomorrow's report comes in hotter than they thought. Bombs away, guys. It could be anything. Market's now betting basically that there's a 50-50 chance for a rate hike coming up next month in November, but the market's still pricing in rate cuts starting July next year. All I can say is dream on, guys. I don't see that coming. I believe by that time, maybe we get rate cuts with a big recession. That might cause it. But you're going to have, the Fed is going to have to lose somewhere in this fight. Right? So what's going to happen is they're going to come to the crossroads. The economy moves into what looks like recession. Now you're going to have the political class screaming bloody murder. The Fed caused the recession, do something. They're going to be calling for rate cuts. We still have high inflation numbers and moving in the wrong direction, I might add, especially if you're going by CPI numbers. You have core numbers way too high, even on their preferred measure. I don't think I just don't see rate cuts on the horizon with inflation so high. And the Fed's going to get to that crossroads, and we're going to learn what they're made of. Are they going to defend the dollar and price stability, keep rates high, or are they going to surrender that fight, try to support the economy, try to support spending by cutting rates? That's coming, and it's going to be that decision. Now the market will have some certainty. Because if the Fed decides to defend the dollar, the market can bet rates are going to stay higher for much longer than they want, and the market's going to respond. If the Fed starts to cut, you're going to see a big rally in stocks, a big rally in the bond market, and of course that's what Wall Street's pining for, but it's not the best thing for you and I, guys. And jobs are only going to get hotter here because you're going to have seasonal hiring starting, and already has started. Christmas coming, kids. So we're going to have people hiring for the holidays, more jobs, more jobs, more jobs. I don't see any way the Fed's not going to have to raise rates again. They will. And they've been, I think they really would like to not raise again. I think stuff's going to force them. They're going to have to. Rates starting to really bite now, guys. I mean, really starting to feel, consumers are starting to feel these rate hikes. When I sit across from customers who want to buy houses and discuss rates and payments with them, it's shocking. Consumers are starting to feel pretty angry, pretty gloomy about the future of the economy. And there's only really one reason for that, guys. It's not even really inflation. It's the result of this inflation already, man. Outrageous high prices. Outrageous prices. U.S. citizens, people in this country are shoppers. We love to shop. We love to go buy. We love to spend. At the same time, U.S. consumers are typically no laydown and will go above and beyond to get a great deal. Nothing gives a U.S. consumer more satisfaction than getting a great price, right? But now everything just keeps going higher and higher and higher and higher. There's really very few good deals to be had out there, man. Even if you get something on sale with these new prices, I mean, I don't know if it's just me, okay? But every time I go spend money, I'm shocked. I'm just blown out by it. I mean, I went to the supermarket yesterday, had to buy a few things. Well, no soda was on sale. I had to pay almost $7 for a 12-pack of Coke. I'm usually paying $10 for 3 or 4 12-packs when it's on sale. Now the new price, the new normal is $15 for 3. That's the sale price. So that's already, the old price where you could get it for $3 a 12-pack. That's all gone. Now you're never getting it for less than 5. Had to pay up to $7 for 12 friggin' sodas, man. It's crazy. Place I love here, in Vegas, Raising Cane's. Great place. Chicken fingers. When I first started going there, their big meal, the Caniac, was $7. $7. You get 6 chicken fingers and some fries, and that same meal. Now this was just during the pandemic, okay? $7.99. Today that very same meal is $17.99. Boycotting, not going to go do it. And they shrinking everything. So there used to be a giant drink you got with it, which I never could finish. Now they shrunk that. They're shrinking the portions. Everything's getting smaller. Pay more, get less. People can't stand that, man. That will piss American consumers off more than anything, guys. And everything's going up. Everything. Think about it. Houses, cars, food, education, utilities, gasoline, restaurants. Anywhere you go. Everywhere you go, prices are higher. Well, there's nothing going to make a consumer more angry than that. When you're used to paying X number for a long time for a product, and now that very same product, maybe even less of that product, costs twice as much. Come on, man. This inflation's been high. We all agree with that. But it's not high enough for the prices we're getting now, man. There's a lot of greed in this. There's a lot of greed. The corporate world having an opportunity to raise prices, taking advantage of that. They got to cover this inflation to get greedy, greedy, greedy. That's why so many corporations are having falling sales but rising profits. Because their margins are record margins, haven't been seen since the 50s. So tomorrow sets up to be a gigantic day, guys. We'll get some reports on jobs, that non-farm payrolls report. I'll be watching the TV at 5:30 in the morning to get that number because I'll know exactly how the day is going to go from that number. There'll also be more data coming in later today and tomorrow that we'll talk about. So we will be back tomorrow to wrap up another crazy-ass week on Wall Street. Hopefully it's going to be a positive day. Although I guess you got to cheer for less jobs, and that's a positive now in this upside down world. That makes sense somewhere. Anyway, guys, that's it for the day. As always, we really appreciate your guys' support. If you could, please hit the like button. It changes our algorithms around. It gets our video in front of some people that maybe haven't seen it. Gets us a chance to pick up some subscribers. We would appreciate that. As always, hit me up in the comments with your questions and fun stuff. Back tomorrow, big day. Looking forward to it, guys. Until then.